Wall Street Journal reports that Hassett and Fed Governor Kevin Warsh are at the top of the president's lists of contenders to succeed Jerome Powell. Joining us this morning is Jefferies chief market strategist David Zervos. David, great to have you. This parlor game is kicking into a new gear. How much of this interests you, the possibilities, at least of the current range of expected candidates?
I mean, it's palace intrigue at its finest, Carl. But at the end of the day, I think these are all incredible candidates. Both Kevin's, if Scott were to take the job, if others that have been discussed were to take the job, we have a potpourri of excellent candidates to do this, and probably a few dark horses on the side as well. So I just don't think it's as market moving, because I don't think you're getting extremes. You're getting kind of a group of people who all tend to have the same set of thoughts when it comes to the Federal Reserve and monetary policy.
Now we have a fresh post from the president today saying that rates are 3 points too high. Are you getting the feeling that we're increasingly getting more restrictive?
I mean, that's been my view for a while. We've argued that the balance sheet was very large in 2022 and 2023, and that was offsetting the effects of the rate rises, and actually policy was quite accommodative, even as we were moving to 4 or 5% rates. Now the balance sheet is back to a size which is about where it was as a percentage of the size of the economy pre-COVID. So our arguments on the balance sheet being accommodative have kind of dwindled off, and now the rate side looks restrictive. So I would say we're actually sitting in one of the more restrictive places in monetary policy that we've been in, even in the last 2 or 3 years.
I mean, David, a big point of contention has been, why isn't the Fed been cutting now when it was cutting in September? Well, the Fed funds rate was 100 basis points higher. The 2-year note yield was lower. PCE inflation was down 0.5 percentage point in the prior months. Unemployment was up 0.5 percentage point. Powell's made this point. And by the way, Kevin Hassett in October of last year said, yeah, the Fed did the right thing by cutting 0.5% in September. Is that going to be a problem if that stance goes against this president's feeling about that?
I don't think so. I think the September cut, which, Mike, you'll remember, we were all priced for 25, and then right at the end, Jay kind of came out with 3 leaks across the press that drove us to 50, just has a little bit of a stench to it. And I think there's a lot of folks who are going to argue that had some validity. A cut was probably the right thing to do at 25, but 50 seemed a little too close for comfort with the election and how it was perceived by many in the market. So it didn't need to happen. As you know, Michelle Bowman dissented against that, but another candidate who is in the mix, Chris Waller, went along with it. And I wasn't aware of Kevin Hassett's statement, but I don't think any of this is going to get in the way. The candidate needs to have a cogent reason, and I think can easily have a cogent reason as to why rates should be coming down materially. And I think you can actually look to the balance sheet very much as a way to push the lower rate narrative. And we've even seen Kevin Warsh do that earlier this week in an interview on Monday, I believe, making that claim. And I thought that was some new fodder for the race.